Hi there, and welcome to another edition of Energy Action's Market Wrap, where we let you know what's happened in the energy markets in the past week. My name is Andy Young, and I'm the General Manager of Business Services here at Energy Action. In electricity markets, we've seen wholesale contract prices for 21 and 2022 continue to ease, but we are seeing signs of consolidation at these levels. It's worthwhile to note that since the end of last year, across the NEM, we've seen an average 30% reduction in contract prices. So if we see the situation around the coronavirus soften and the economic lockdown beginning to ease, we expect to see an increase in demand, which should lead to an increase in contract prices as well. Western Australia currently has 12 large renewable projects that are either under construction or in the planning phases. Combined, this will see an increase of 842 megawatts into the Western Australian system. We would expect prices to ease once those projects start coming on. In the gas market, we expect gas prices to stay at the current levels unless there are changes to the domestic gas reservation policy or there's a change in the supply situation from the producers, which is resulting from lower demand from consumers. Now, we believe also that the current gas prices are not supporting adequate returns for the producers, so we don't see prices hanging around at these levels for too long. Meanwhile, in the environmental certificate markets, LGCs are trading at around about $30 a certificate. We expect these prices to continue to fall in the future because of the expectation of increased production unless there's an intervention from the regulatory side. In other certificate markets, we're seeing VEECs trading at $36 a certificate and New South Wales ESCIs currently trading at $29.25 a certificate. In the news this week, Snowy Hydro announced they've entered into a contract with a large energy user to manage the super peak period. Now, this is designed to cover price risks surrounding the operational demand spikes in the early morning and the late afternoon, which is the main period for lower solar output. This provides a new market for flexible renewable energy generators such as Snowy and is expected to encourage other hydro operators as well as battery owners into similar arrangements. Now, this arrangement was in response to an initiative that came about from the Australian Renewable Energy Agency to develop new financial products which would allow increased levels of intermittent wind and solar generation in the energy system. These super peak contracts are a natural fit for somebody like Snowy Hydro, which is already offering firming products into the market or to the wholesale market and to large customers. Also in other news, Australia's rapid pace for building renewable projects is at risk thanks to a variety of factors such as the coronavirus pandemic, but also the oil price wars, which has seen consumption down by more than 20% and also increasing economic headwinds. There's also the end of the Australian renewable energy target, growing network constraints, the weakened Australian dollar and reduced electricity prices. So all of this combined could see Australia's renewable boom turn to a bust. Well, that's it. Stay safe and cheers for now.